Rand weakened against the dollar in early trade today ahead of the manufacturing figures which will be released later in the day. The currency trading at around 18.64 against the dollar. Let's unpack the other market moves. Zwelakhe Mnguni is the Chief Investment Officer at Benguela Global Fund Managers, and he joins us now live. Zwelakhe, it's always good to talk to you. Thanks very much for coming on to Daytime Update. Shall we begin with mining production data out for January? What initial glimpse are you getting in the first quarter GDP dynamics? What's this data telling us, in a context where we've not seen very good news coming out of the sector?
Look, I think the mining production was down, but I think on the sales side, the mines basically were able to sell some of their stockpiles, particularly the gold and the iron ore sectors actually saw a big jump in their sales. But on production, I mean, manganese, gold and diamonds were the ones that were down quite a lot. And on the contributors, iron ore was a little positive.
Yeah. S&P Global Ratings has forecast that South Africa's banking sector will lose about 74 billion rand in unpaid loans, of course reflecting the broader economic tremors shaking the country at the moment.
Yeah, indeed. I think the economic environment is tough. I mean, it's typical of the banks to have some impairments or the credit loss ratio spiking during times of high interest rates and low economic growth. So the numbers, I mean, are expected to be around 1.4%. But I think through the cycle, you're probably looking at between 80 and 100 basis points, or 0.8 and 1% through the cycle. So yes, the number looks bad now at 1.4% as expected, but I think it's just reflecting the strain that consumers are taking across the board, from inflation, from high interest rates, and everything else, fuel costs and everything.
Yeah, absolutely. I imagine, Zwelakhe, that banks have some protection against this.
Yeah, so not really. I mean, there's two protections that the banks have. Number one is that they diversify their books. So the majority of the banks have loans being given around mortgages. So that tends to be a lot more safer. People tend to be a lot more resilient around that. They try and make sure that they don't lose their homes. And then the second protection is that during the good times, they kind of look forward and provide or put like a little saving for the expected deterioration in credit environment. So they would have created that type of savings, and it would be coming through now in terms of helping them. But definitely they will take the pain like anyone else.
Huh. Well, coal miner Exxaro Resources headline earnings per share came in at 46.81 in the year ended December 31 last year. Of course, that's down from the previous year.
Yeah, I think the numbers, I mean, I looked at the results and I thought they were resilient. I think there's two factors that have affected them. I think on the coal side, I mean, the prices have come down quite a lot. I think in terms of production, there was a bit of a stall in production that didn't come through. And lastly, the cost also went up. I mean, as you produce less, you have to spread your overheads over a much smaller base, production base. But I think the positives were that they were still able to pay a dividend, I think 10 rand plus 5 rand for as a special dividend. So they paid about 15 rand or over 15 rand. And I thought that was a positive surprise in the environment. But it does leave questions about their plans to invest into other minerals to diversify away from coal. They had about 15 billion rand in cash, and this would be about 6 billion in terms of dividends, just under 6 billion. So based on that, they'd be left with a lot less firepower to be able to make acquisitions. It does kind of signal that maybe that ambition to make acquisitions might be waning.
Yeah. Well, this next one is sort of a mixed bag of good and bad news. Shell aiming to reduce its net carbon intensity by 15% to 20% by 2030. And then on the bad news side, it plans to cut about 20% of jobs in its deals team.
Look, I think it's actually quite disappointing, but it's in line with the trend that we've been seeing across the developed world, where all these emissions and Paris Agreement targets have been pushed further into the future. So Shell had guided initially that they'll do 20% emissions reduction by 2030 and 45% by 2035. So what they've done is they've now said between 15 and 20% by 2030, and the 45% has just disappeared for the 2035. Basically highlighting that companies are trying to adjust to the transition period. It may not be as what was expected in the Paris Agreement. But what is of concern is, of course, that people lose jobs out of those transitions. But most importantly, of concern to me, as in a country like ours, where this just transition is being pushed very, very hard to a point that we will lose jobs, and we are not creating any headroom to basically delay and preserve jobs for much longer. So I think it's a concern, and it's something that the emerging world is basically seeming to be taking a lot of pain on, and then the developed world is basically trying to stall now the process. So it does create a bit of frustration.
Yeah, absolutely. Zwelakhe Mnguni, it's always a good time to talk to you, right on time for your business market updates. Let me thank you for your time as I lose my words. He is Chief Investment Officer at Benguela Global Fund Managers.